just got the chime that told me it's 9 o'clock, so it is time to go ahead and get started here. We should have quite a few more people trickling in, but we're going to go ahead and get started on time. So I want to say good morning to everybody. Thank you for coming to the NPERS Employer Reporting webinar. We're really excited to have this new workshop option to hopefully be more accessible for those of you who couldn't make it to one of our in-person events for whatever reason that might have been. My name is Jeremy Calcara. I'm the training specialist with NPERS, and on our panel today is also Tony Munson from our accounting department. And this year we're really excited to be able to have a representative from our internal auditing team, Vanessa Holen, here to talk with us as well. And then Jonathan from our internal auditing team. You probably won't see or hear him, but he's going to be recording your questions and stuff like that during the recording. So that's who's here on our panel today. I did want to start off with a little bit of housekeeping just about the webinar. You probably noticed by now that your mics are muted and your cameras are off. That's because there are about over 100 people that are registered to attend today, and WebEx meetings tend to run at the quality of the worst connection on a call. So we have all the mics muted and cameras off for non-presenters just to avoid dragging down the bandwidth of the event. But what you should have on your screen though is a panel for questions and answers, Q&A panel, and a panel for chat. We are going to go ahead and ask that you not use the chat panel. If you do have a question, though, please feel free to utilize that Q&A panel. The Q&A panel allows us to keep track of the questions that have and haven't been answered, whereas questions can easily be overlooked in that chat panel. But I want to encourage you to keep both panels open, as we're going to go ahead and put links to all of the documents and tools that we're talking about into that chat panel while we're talking today. But again, please keep your questions in that Q&A panel. And like I mentioned, Jonathan will be monitoring that, and we will answer your questions at the end of our time here today. Next, each of you should have received a file and an email from me late last week. That is our PowerPoint presentation that we're going to be using today. It might be a good idea to have that open for reference while we're having this chat this morning. If you didn't receive it, you can find it on our website, and I just went ahead and put the link to that on in the chat there. So if you don't have that open, the link is in the chat for you to open that up if you'd like to. And then when our time is over today, I did just want to mention that you're going to have an opportunity to fill out a survey about our webinar. I would really encourage you to take the time to fill that out and to give us your thoughts. Like I mentioned, this is our first time doing one of these, and so your feedback will be invaluable as we consider the best content and format for these in the future. And then finally, I did want to set some expectations for the Q&A time that we have set aside for today. While we do love the WebEx format for its ability to reach a large audience with the workshop content, we do acknowledge that it leaves something to be desired when it comes to answering specific questions that you might have about your school. Because of this, there is a good chance that we won't have time to get to all of the questions that we get asked today. I say this for a couple of reasons. First, as I mentioned, there are well over 100 people registered to attend today. If all we did for the whole time was Q&A time, there's a good chance we wouldn't get through all of them in the time allotted. And then secondly, it just really is a lot more important to us that we answer your questions correctly than it is that we answer your questions quickly, or even today. One thing I've noticed as we did these workshops around the state is that oftentimes the questions that people come to these events with, they don't have a simple one-size-fits-all solution. They all, facts and circumstances matter, and so it usually takes a little bit more discussion. It needs to be a conversation, and sometimes those conversations can be lengthy. So by all means, though, I would ask for you to put your questions in that Q&A panel. Jonathan's going to be monitoring those and kind of grouping those together for us so that we can answer as many as possible when we're done with our presentation here today. But if we don't get to it, know that that's not because we're avoiding you or dodging the issue. It's just it's just a time issue and just kind of the format. And so in your information that you'd be given, you do have the contact information for Tony, who is the contact for school reporting agents, and he's always happy to field your questions if we don't get them today. We also will take your name down and maybe respond to questions in a document afterwards if there's enough left over that we could send out to people who are here in the webinar. Um, that's the question and answer. So moving along, I just want to give a quick agenda of what we're going to go through, what we're going to cover today. I'm going to spend some time talking about the employer reporting role and some ways that recent legislation is going to be affecting that role. And then Vanessa's going to talk about some common auditing issues, and she'll introduce you to some new tools that they've developed to help with those issues. We've got some news about process changes and some other changes to go over in our reporting manual. And then we're going to hear from Tony about some of the trends and common mistakes he sees on the accounting side before I wrap up with just a quick chat about employment and a quick recap of the morning. All right, so let's talk about employer reporting in general here for a minute. I do want you to know that we understand that you all have an incredibly important job as employer reporting agents and an incredibly difficult job. Just about a month ago or 6 weeks ago, I finished up our spring seminar season where we held 9 in-person seminars and 17 webinars for school employees to educate members about their retirement plan. And something that we always kind of camp out on talking about is how great that school plan here in the state of Nebraska is. These defined benefit plans where your account balance doesn't matter are kind of going the way of the dodo, but yet here in Nebraska we have this plan that's not only still around and sticking around and surviving, but it's thriving for our members, and that's amazing. Um, but because that account balance doesn't matter, the plan really can only thrive in as much as we get the information, we get accurate information from our employer reporting agents. And so that's where you come in, and we really appreciate the job that you do. Um, but because that account balance doesn't matter, the correct reporting of service time and salary is huge. And when the information that we get from you is accurate and comprehensive, it does ensure proper benefit calculations. It minimizes audit points. It decreases follow-up work and prevents a delay in benefit payments. At NPERS, we rely on you for correct information so that we can properly calculate benefits. And believe me, we understand this isn't easy. We know that the information that we ask for might be something you have to dig for. I'm sure it can be a hassle, especially when maybe you're possibly having to dig through records that predate your time as a reporting agent to get us the information we need. Please know we don't ask for this information to be annoying. We don't sit up in our offices trying to figure out ways to make life harder for our agents. Uh, Before my time at the state of Nebraska, I was in insurance writing for almost a decade. I won't mention which company I work for, but they're known to brag about being like a good neighbor. Um, and I spent a good amount of my career there processing applications for people's um, travel trailers, motorhomes, ATVs, UTVs, golf carts, snowmobiles, so people's toys. And we'd get these applications specifically for snowmobiles, and there would be like this little box on the app that would ask if the snowmobile was outfitted with auxiliary lighting, yes or no. And if the snowmobile did have auxiliary lighting, the premium would be one thing, but if it didn't have auxiliary lighting, the premium would be the exact same thing. It didn't matter. There was no discount for the auxiliary lighting. There was no extra charge. It did not matter whether it had this auxiliary lighting. But our process was that if the agent neglected to check either yes or no in that box, we would hold the application until the agent contacted us to answer the question. Even though the information didn't matter, it didn't affect anything. It was just a passive aggressive attempt to train our agents to do things the way we wanted them to. It was just pretty arbitrary. And I mention that because I want you to know that at NPERS, we don't do that. If we're asking for information, we're asking because it's important. Accuracy matters, and a half an hour of time here and there can change an employee's classification. It can be the difference between a full year of service credit or partial service credit. So when you hear us say things like all employees must have their hours tracked every time they render service at the time they render service, it's not because we're checking off needless boxes, it's just because it matters to our members and so it matters to us. All right, we do have some legislative news. It was a big year for the school plan and the unicameral. I'm sure most of you know it already because the info from LB 147 was in our internal audit newsletter, and I'm sure that as soon as you get that newsletter, you print it out and read it 2 or 3 times, and then just leave it somewhere where you'll read it over and over again. I kid, but seriously, please read those newsletters. A lot of work goes into those have good. To have good information in those to help you out. Um, but for those of you who might have missed that newsletter, I am going to go ahead and drop the link in the chat panel. Um, okay. So I have a couple of people saying that they can't connect to audio. I would just encourage you to, if you click on the bottom of your screen wherever the audio is and you switch audio, you can switch to either the call-in or the using computer for audio. Um, that would be the only solution that I might have for that. I apologize that you're having those issues. I'm not able to see exactly what they are, but I would try to switch your audio connection if you're able to do that. Anyway, back to LB 147. The overall purpose of the bill, again, I put that newsletter in the chat. The overall purpose of the bill for LB 147 is to direct the transfer of OSERS, the Omaha School Employees Retirement System, from the Board of Trustees to NPERS. There are a series of steps specified by the bill that are going to happen on the way to making this transfer, but this transfer will take place on September 1st of 2024. I do want to mention there that the bill specifies that OPS remains solely liable for the retirement system's funding obligations and will cover all costs for the management transfer. We did receive a lot of questions about that. Who's paying the bill for this transfer? It is OPS. So just want to answer that question there. But the big change the LB 147 made for our purposes is that it defines some terms for us that have been pretty nebulous in the past. When I started going out to do seminars, when we got to the part about reemployment after retirement, when it came to substitute or voluntary service guidelines, our answer was always that instances of substituting or volunteering needed to be sporadic and intermittent. But if someone asked what sporadic or intermittent meant, our answer was pretty much, I don't know. Um, it was just, make sure it's sporadic and intermittent. Maybe, I don't know, we've never seen anybody get in trouble for 3 days, 4 days, but we didn't have a definitive answer from the legislature, from the IRS, from anybody. But LB 147 does give us those definitions and helps define those terms for us. It defines intermittent basis as no more than 8 days in a month of voluntary and or substitute service provided on a day-to-day basis with no prearrangement. This of course raises the question, what is a day of service? And LB 147 gives us the answer. A day of service is any length of voluntary and or substitute service provided during a single calendar day. This length can be 5 minutes, and it can be 8 hours. It all counts as the same. So that's what a intermittent basis is, and that's what a day of service is as defined by LB 147. So how does this affect you? Well, this became law on May 27th, 2021, so just a couple of months ago here. So there is an immediate need to track and document that voluntary and or substitute service performed by members who have retired within the last 180 days. This is a really big change, and we understand that there are going to be a lot of questions, so we've tried to get ahead of that by creating a document of what we anticipated would be frequently asked questions. That document was attached to that internal audit newsletter that we sent out and that I just linked in the chat. But I also am just going to put the link to that document in the chat right now if you'd like to take a look at it. So that is LB 147. So that is all for me here for a little bit. At this point, I'm going to go ahead and cede the floor to Vanessa from our internal audit team.
Thank you, Jeremy. First off, welcome. Boy, if there is one thing that COVID did for us, it was bring us together in this virtual environment so we can reach so many of you at the same time. And I think we're all used to dogs barking in the background and technical difficulties, but hopefully we'll try and make this as smooth as possible. Just to introduce myself, my name is Vanessa Holen. I was in law enforcement for about 15 years and then came on over to auditing. So with that, I have broad shoulders. I am already used to when I call you on the phone and I hear that, ugh, that sigh, I get it, and know that I understand that. So just to get that out of the way, we do have Jonathan here with us. We have both been with this team since January. So it's a fairly new audit team. And this is the first time I believe the internal audit has been along for the fun. So we are really excited for the opportunity to be able to speak with all of you on a more proactive approach. We're hoping to provide you with some insights into how we function, specifically what we look for when processing an audit, and identifying the one thing that will help alleviate most of the issues we encounter during an audit. This presentation will definitely change how some of you see things. It will most likely change how a lot of you do things, but we are also hoping that we can explain things so they are more easily understood. Our contact information is listed in case you need to get a hold of us for any questions during your audit. Certainly, if you need a clarification on something we've said or have scenarios you would like to discuss, give us a shout. However, your main contact is going to be Tony Munson with accounting. Right there, he'll help you out. So why do we do audits in the first place? The whole purpose of the audit process is to make sure schools and ESUs are in compliance with state statutes that govern the school employees retirement system. We need to make sure all eligible and only eligible employees are enrolled. We have to ensure the right amount of contributions are taken out, reporting eligible and only eligible compensation, ensuring the proper amount of contributions are reported, and we have to confirm the employee information is accurate. Know that we have state statutes that mandate us to conduct audits on the plan to ensure compliance. But with that, the APA also audits our agency. So we need to ensure that policies and procedures are followed on our end as well. So just a little humor. Look, we understand that simply hearing the word audit can make you want to run for the hills, if for nothing else than the amount of work that it involves. The one thing that we have learned quickly in the internal audit department is how much work is required from reporting agents. We have been able to spend our entire time learning the retirement rules and how to apply them while dissecting how the processes work. We know that for the reporting agents, NPERS is a small amount of your workload, and that if some of the rules are confusing to us, we can't imagine how you might feel. Our goal is to try and make understanding and applying the rules as simple as we can. Sure, facts and circumstances matter. Ask our legal counsel. And there are some things that are just not a simple yes or no. Know that when you present us with a situation, we will take your case and vet it with different departments within our agency to ensure that you will receive the same answer for the same fact pattern. We are hoping to change the view from auditing of running for the hills to something that can be a learning experience for you and your team. At the very least, we are hoping we can provide you with some insight into why we do what we do, and hopefully send you away with some tools that will ensure the rules are easily followed. If you leave here today with some pointers that will help you ease the pain of the audit process and help your school apply the rules, we'll call it a success. The first thing we want to do is take a moment and give a huge round of applause for ESU 9. Out of the 23 completed audits for the fiscal year ending 20, they were the only audit that came back with 0 issues, 0 findings, 0 recommendations. Way to go, ESU 9, and thank you for ensuring that the laws for the school retirement plan are successfully applied. This is a huge accomplishment, and your employees can know that their retirement is in good hands, giving them the service credit and the contributions they earned. Per state statute, NPERS is required to audit schools to verify compliance with the plan requirements. We went into that, and there's the state statute there if you want to look it up. I won't bore you with actually reading it. But let's get into just a little bit about the audit process. We are going to be testing 1 fiscal year. So the first thing I want you guys to note is that it's July 1st to June 30th. That is the statutorily mandated fiscal year. So it doesn't matter what your payroll year is, your plan roll year is, that year is what we are going to be testing. Then we're going to take 1 month's payroll period that we're going to test. So again, it's not your payroll period, it's going to be 1 month that we're going to be testing. Within the year, we're going to check every single non-contributing employee that your school has and every single new contributing member that your school has enrolled. For the month, we're going to take a tested few. It will always be your superintendent, it will always be your reporting agent, and then we're going to take a random mix of other employees depending on how big your school is or your ESU. Really quickly, what you're going to get is just an email from the internal audit department with a due date for a response. Know that if something happens, we understand you're busy, we know life emergencies happen, and you cannot make that initial due date. That's okay. All you have to do is communicate with us what's going on, and we will extend that due date for you. You're going to receive an audit checklist and a questionnaire. These things are going to help your auditor understand how your processes and procedures work. And then at the end of your audit, after several follow-ups, let me just tell you right off the bat that that's normal and completely okay. I get a lot of people that go, oh my goodness, follow-up number 3, 4. Just know, because of your specific case, we're going to have to ask different questions. Doesn't necessarily mean anything other than that. At the end, you're going to get your final audit letter, and it's going to have any findings or recommendations. It's going to give you a 20-day due date to respond to that as well. Really simply put, you don't need to make it any harder than it is. You can take that audit letter and you can respond for every finding, every audit point right there. Change your font, change the color, and send it back to us. We will also need documentation to know you've made the adjustments that are needed, how you're changing your processes. Anything like that needs to go in there. But again, just communicate with us. If you can't meet that 20-day deadline, we can provide an extension depending upon what's going on. A couple of tips for your audit. Organization is huge. So within the items that you get from us, we're going to request that everything is given to us per member. That just makes it easier. If we're going through the hundreds of papers or electronic files that you provide us, we might miss something. And if you already provided it and have to resubmit it, that can take time. It can get exhausting. So make sure that you organize the stuff that you send us. We are requesting things more electronically now, but completely understand if you want to send it in by paper. However, to help you, if the concern for the electronic transition is to protect personal information, all you have to do is let us know that you would like an encrypted email. That initial email you get will not be encrypted, but we can send that to you, and that's how we can correspond with social security numbers or any private information that you're going to provide us. during the audit. Otherwise, feel free to use any software that you have as a safety net, and we can work through all of that as well. So you will hear a lot about the internal audit newsletter that came out, and it is going to include everything that we talk about today. So if you've read that, thank you, thank you, thank you. That's going to give you some tips and some tools. If you came to the NASBO presentation, that's also the same information that we're going to be going over today, and that's because we think that it is so important. When Jonathan and I were learning the school's retirement plan, I mean, first off, it's you guys have an amazing plan. With that comes so many rules and regulations. So when we were learning it, we needed to really go down to the basics to figure out how everything is applied. And we understand that even reporting agents that have been on for a while, as well as all the new reporting agents that have come after COVID, you guys, that it might help you too. So we have tried to make this as easily understood as can be. So read that internal audit newsletter. If you look past, if you look back past on the audit newsletters, you will find that there are approximately 7 to 8 ongoing issues that we find while doing audits, depending on the year. They'll get shuffled around just a little bit, but those top 5 are what's presented. We could go into each one as we tend to do every year, but with a different set of eyes and a different perspective, we wanted to take a different approach. So when you look at documenting eligibility and hours worked, enrollment of part-time employees, substitute and extra duty work, bus routes worked versus hours worked, and internal controls, most of these issues can be solved with one simple approach. Just one thing. And that's tracking hours. How do we track hours? What hours do we track? What hours get added together and tracked and maybe reported? How do we determine what hours we track? We can make it as confusing as we want, or we can make it as simple as we want. The audit team, well, we are all for simple. Situations will muddy the waters, different elements will change how we do things, but the foundation of it all is with one simple instruction. Jeremy said it earlier, I'm going to say it again, and I'll say it throughout this entire presentation. Track all hours worked at the time they are worked, regardless. No exceptions, no questions. We had a question from a previous workshop to define the difference between tracking and reporting hours. Simply put, we are going to ask you to track hours for all employees every time service is rendered. Reporting hours will be for those contributing members. All hours tracked for services rendered that you did, they then need to be reported. Another question has popped up multiple times within the workshops. Do we need to report wages when earned? And the answer is yes. Ideally, we would want even base salary wages reported when they are earned. However, there has been an exception made to allow for teachers to be paid on a yearly straight line basis, so that it is as long as it is in your master negotiated agreement. But NPERS will continue to work with all employers covered by the school employees retirement system to ensure extra duty wages and hours are being timely and accurately tracked and reported so that we can pay our plan members the correct retirement benefits. So for extra duty pay, instead of paying them throughout the year simply to provide a consistent monthly payment, we need wages reported when they are actually earned. If the season is 3 months and that is when services are rendered and wages are earned, the wages should be reported in those 3 months. If the extra duty is worked throughout the 10 months of school, the wages should be reported during those 10 months. This portion of the presentation will focus on hours, but we wanted to make sure that question was answered before getting into the thick of the hours. So let's talk about how we analyze employee hours. To do that, we first need to define 3 categories of employees, specifically for retirement purposes. There are statutory definitions for various employment categories for retirement purposes that may not be consistent with how your school uses the term. We need to make sure we categorize each employee consistently and correctly to ensure the employee receives the correct retirement benefit. So let's first get into the category of employee that has been known to cause the most confusion: substitute employees. What is it? You might have heard the term true substitute in the past, but really I think it confuses the situation just a little. It really is as simple as this: you either are a substitute or you are not a substitute. There's no in between. The statute clearly defines substitute and makes no exceptions as to how it pertains to the retirement plan. Throughout the presentation, I'll still use that term, true substitute, as I know that's the verbiage that we have all known from the past, and it may help process the information. However, the one thing I want you to learn and to remember is that you are a substitute or you are not. The definition of substitute employee has changed so much over time that it now has a different meaning to each school in ESU. Substitute employee used to be defined as a substitute that came into the classroom only to sub for a teacher. However, this has changed substantially. We have substitutes for everything, from bus driving, cafeterias, office workers. This is why it is so important to define substitute specifically for retirement purposes. So who is a substitute? Well, there's 3 prongs that they have to meet to be a substitute. The employee is hired as a temporary employee. They're going to assume the duties of a regular employee due to a temporary absence of a regular employee. No one else is a substitute. If they are hired as a regular employee on an ongoing basis to fill in for a regular employee, aka a permanent substitute, well, then they are not a substitute for retirement purposes. Why does this matter? Well, it matters because substitutes are not eligible for retirement, right? So only if they fall within the very specific definition, they are a substitute. Let's have a little fun and start off with a pop quiz. If you were at the NASBO conference, you've already participated and you should get 100% on this quiz. So let's take a look. An employee is hired by a school district to temporarily fill in for regular employees when they are temporarily absent. The employee does not work any extra duties for the employer and will sit by the phone and wait for a call to come to work. This employee is a substitute employee. But does the employer need to track hours for this employee? Throughout this presentation, we'll work through some keywords. Here's a keyword. The question specifically says hours and not days. So for the answer, yes. Although the hours are not reportable and they are not eligible for the plan, they must still track hours and keep logs on who they substituted for. This documentation provides 2 things for you. Number 1, you will receive your notification that your school, when you receive your notification that your school or ESU is under audit, this is something you will be thankful you have. We need to establish what category the employee falls into, and if they are a true substitute, we will need documentation to confirm that. And number 2, more importantly for your school, the documentation will help you if your substitute employee change categories. Should this employee pick up extra ongoing regular hours, they are no longer considered a substitute, and all hours worked will need to be tracked and possibly reported if they meet eligibility. Tracking the extra hours can alert you if the employee changes categories as well. Maybe initially you do not think the extra hours are going to be regular and ongoing, but in documenting the hours, it clearly shows that they are. Then the proof is in the pudding, and the category needs to change for the employee. So who is a regular permanent employee for retirement purposes? A regular employee is classified as a contributing member in the retirement plan, and you can become a regular member in two different ways. You either are eligible from the date of hire, or you become eligible by how many hours you work. So what makes you eligible from the date of hire? If you work a regular, full or part-time position and work a full or part-time schedule on an ongoing basis for 20 or more hours a week. So 20 hours a week is our sweet spot for eligibility. If you hire a permanent employee with the intent that they are going to be working on an ongoing basis for 20 or more hours a week, then they are required to be immediately enrolled in the plan. But what if you do not hire them with the intent they are going to be working 20 plus hours a week? Well, then we track hours to determine if they become eligible. If they are hired to provide less than 20 hours of service per week, but end up providing service for an average of 20 or more hours per week in any 3 calendar months of a plan year, then they become eligible and are deemed a regular employee for all future employment with the same employer and begin making retirement contributions within the next payroll period. Now, there are a few things I want to highlight on this slide. The first one is the phrase, average of 20 or more hours per week. Notice it does not say 20 or more hours a week. It specifically includes the word average. So if Susie works 80 hours one week, 0 hours the next 3 weeks, depending upon the number of days in the calendar, their average is 20 hours a week. The next highlighted word is any. In any 3 calendar months of a plan year. And remember, plan year is from July 1st to June 30th. They don't need to be consecutive. They can be, but they don't have to be. It doesn't matter where those 3 months fall within the year. As soon as they hit that third eligible month, they are required to participate in the next payroll period. So again, we're looking at that plan year from July 1st to June 30th. It doesn't matter what your plan year is, your fiscal year is, we have to go with that year. You can start in August and into July, but the months you track must be from July 1st to June 30th. Pop quiz number 2. An employee is hired as a regular employee to work an average of 20 or more hours a week, but less than 40 hours a week on an ongoing basis. This employee is immediately enrolled in retirement and starts contributions. After 3 months of employment, this employee is asked to pick up occasional shifts for other regular employees who are temporarily absent. Now we know that it's important to track hours for the regular employment so that the correct amount of credible service is reported. But does this employer need to track hours for the extra shifts the employee picks up when the other regular employees are temporarily absent? Yes, of course. Remember, once an employee is considered a regular employee, they can no longer be considered a substitute. Therefore, all hours need to be considered as eligible compensation and contributions withheld. Add the hours together and report all of the hours as service credit, as well as the corresponding wages and contributions. Well, let's keep going. Pop quizzes are so fun, right? An employee is hired as a permanent employee to drive a bus 15 hours a week on an ongoing basis. This employee starts to fill in for other bus drivers when they are temporarily absent. Now we already know we need to track the regular ongoing hours spent driving a bus and not the number of bus routes, right? Did we catch that part? Number of bus routes worked does not equate to hours worked. Okay, moving past that. But we do have to track hours for the employee. But do we have to track hours for the employee when the employee picks up additional shifts temporarily filling in for regular employees who are temporarily absent? Well, of course we do. The bus driving hours are regular and ongoing. Therefore, the substitute hours are not considered true substitute hours anymore, and they need to both be tracked to determine eligibility. Should the combined hours equal an average of 20 plus hours a week in any 3 calendar months of the year, then they become eligible to participate in the plan, and contributions need to be subsequently withheld on the next payroll period. Okay, last one for a little bit. An employee is hired as a regular employee, whether they're exempt or classified, working 40 hours a week. This employee is immediately enrolled in retirement and starts contributions. After 6 months, the employee begins to temporarily fill in for regular employees who are temporarily absent. Two parts to this question. Does this employer need to track hours for their regular employment? And does this employer need to track hours for the regular employees who are temporarily absent? The answer to both of these questions is yes. You must track hours for the regular and ongoing, as well as the filling in for hours. This can get a little tricky. You would think that once an employee has 1,000 hours of credible service to receive a full year towards retirement, the hours track doesn't matter. However, we all know that life throws us curveballs, and we need to be prepared. What happens if a global pandemic hits and the employee is only able to work half of the year, or they get injured, or their employment terminates? Then what? That employee needs to be credited with the service hours actually rendered. If you are not keeping track of hours worked, you will not have an accurate reflection of how much credible service the employee is entitled to. The last category of employee is probably the easiest, the temporary. Who is a temporary employee for retirement purposes? Very simple. You work for a limited period of time, not to exceed 1 year, to accomplish a specific task or purpose, and as soon as the task is complete, your employment terminates. Okay, we saved the hardest one for last, but we did have a question posed to us prior to this workshop that specifically gets into this. So an employee is hired by a school district as a substitute, temporarily filling in for regular employees when they're absent. After 4 months, this employee also picks up hours cleaning the building for 2 hours a day, 3 days a week on an ongoing basis. This employee is no longer a substitute once they start working on an ongoing basis cleaning the building. Does this employer need to track hours for this employee? This is tricky and takes some deeper looking into the state statutes, rules, and regulations, but what it comes down to is this. Once an employee begins an ongoing and permanent work, they are no longer considered a substitute, and all hours have to be tracked and added together for eligibility purposes. So we had a question posed. We have a teacher substitute who also has an extra duty position as an MS basketball coach, normally only a 3-month position. Do I need to be tracking the hours for this employee and start retirement if they qualify during those 3 months that they are coaching? Answer to that is yes. Coaching is not exempt, so you need to track the hours during the coaching to be combined with their substitute hours and then put them in if they become eligible. So what's our theme for the auditing team's presentation today? Regardless of category, all employees must have their hours tracked every time they render service, at the time they render service, to document eligibility and to make sure they receive the correct retirement benefit. Here is one thing in learning the retirement plan that took us a little bit of getting used to. We have considering eligibility based on that average of 3 months, average of 20 hours in a month for any 3 calendar months. So how do we do that calculation? Let's make sure everybody is doing the same calculation. That way, when you guys are tracking and you're trying to figure out eligibility, and we're doing it on the auditing side to figure out eligibility, we're all going to come to the same conclusion. So here, right here, is the calculation that we want everybody using. This is the best calculation if you look at state statute. You're going to take your total number of hours worked in one calendar month. So again, we're looking at our retirement terms and not your school terms. You have to look at the calendar month. So from the first to the last day, not your payroll period. You divide that by the actual days in the calendar month. Depending on the month, whether you get February or December, it can have a huge impact, and it will be completely different with the same amount of hours, whether it's an eligible month or not. You multiply that number that you get by 7, because there's 7 days in any week. That's the one consistent thing. That's going to equal the number you need in determining the average hours worked in one calendar month. Remember, they do not need to be consecutive. Here's an example that we have for you to show the difference of tracking the hours and using the calculation. So if we're looking at February for somebody that works 82.5 hours versus somebody that works 83 hours, if they work 82.5, they are not going to be eligible. If they work 83, they are going to be eligible. That is the importance of tracking hours worked and using the exact same calculation. You could do the same thing using 83 hours, making an eligible month for February, plug it into December, and it is no longer an eligible month. Now, how do we make monitoring hours, tracking hours easy for you? Well, again, we created an eligibility calculator that is simple to use and auto-populates for you the average. It's going to use that same calculation that we provided you. So it will auto-populate the answer if it's 20 or more hours a week. And then it's going to tell you when and if they become eligible. When you plug in the numbers, and if they hit that 3rd month, bright red warning saying they are now eligible, enroll them in the next payroll period. All you have to do is go to our NPERS website, employer reports, school, and calculator tool. You can download it. You can use it for every single employee that you are tracking hours for, however you want to use it.
I've also
We've
put it
also,
in the chat.
perfect, thank you. We also created a substitute log and an extra duty log. And we have examples of those on the next slides here so you can see them. Here is going to be your monitoring of hours. If you look closely at this, you can see the difference of hours worked and how it makes a qualifying month or not a qualifying month. And this is what it's going to look like. It will auto-populate, do the calculation for you, auto-populate your status, and then in that enrollment indicator column, bright red warning saying they have met eligibility, enroll them in the next payroll period. The next slide is going to show you, let's see, that's our substitute log. So let me just tell everyone, these are logs that internal audit has created, the department has created to assist you. We have been asked several times if these have to be used. These are not a requirement. These are tools that we have made after looking at all the state statutes, the rules and regulations, and saying if we were to receive this in internal audit, this would suffice. This has signatures, it has everything we need, time in, time out, who they substituted for. It has a time conversion chart on there for you. So we tried to make it as simple as we can. But again, if you have a tool, feel free to use that. You don't have to use that, the one that we're providing. The next is our extra duty log. Along with this, that we don't have a slide for, is actually a document in tab 2 in this log that's going to explain to you all the statutory requirements for what we are requesting, because again, we know there's a lot of schools that report hours and wages when worked, and they do it exactly how we're asking, but we acknowledge that there's a lot that don't. So this is going to give you a document that's going to explain to you why it's important, and specifically give your employees some scenarios where it can show them exactly why it matters to them and how it could affect their retirement benefit. Again, you don't have to use this, but this is also something that you can provide to all of your employees. What we hear a lot from reporting agents is we get it, we understand the rule. I can't get people to follow it. I tell them they need to track their hours. Now what do I do? We completely understand that question. So we are trying to check our box and get you to check your box, is how I refer to it. We have rules that we need to help you learn the rules. We need to ensure compliance of the rules. So we are checking our boxes by having these workshops, by giving you the information, by providing you tools that we can give, anything that we can think of, and handing that out to you and saying, this is what you need to use. Now, what you need to do is give these documents to your employees. Say, we need hours tracked. You give them to your employees, and now it's up to them to track their hours. You as a reporting agent can't be guessing. Yeah, we understand all of that. So they need to track their own hours and give it back to you. One thing I want to make clear is that your box doesn't end right there. There does need to be some follow-up, maybe something in policy, maybe you change contracts that say if you don't turn it in, you don't get paid, or failure to turn this in, you're understanding that this could have an effect on your retirement benefit. Sending out emails to them monthly, reminding them, hey, we need extra duty contracts sent in, just a mass email, something else to try and get these back and ensure that your policies are being followed as well. The one tool that we don't have on here that I did want to address, if you go on that same website for us, we have a lot of questions about if somebody is eligible and how we can document that. There is a great tool on there to help you figure out if an employee is going to, if you should enroll an employee upon hire. So it will take you through all the questions, you answer yes and no, and then at the end it'll take you to yes, enroll them immediately, or no, track hours. It'll give you that information. So please utilize that tool as well. That is all I have for everybody. I will turn it back over to Jeremy.
All right, and then again, I did put that calculator tool that she was just talking about in the chat as well. So again, those tools that Internal Audit has created, all of those are there in the chat if you would like to see them if you haven't seen them before. I think they're very helpful. And we're going to go ahead and move on. I see we do have some good questions coming in. We're going to go ahead and save those all for the end here. But thank you for your questions. And again, just please keep putting those in the Q&A panel, and we are tracking those to make sure we can get as many answers as we possibly can. So we're going to move on here and talk about some just some new processing things that we're doing here. that you probably are aware of already, given that it's August 4th and this took effect August 1st, but just wanted to let you know that effective August 1st, 2021, NPERS will no longer accept paper, emailed, or faxed non-contributing member forms for the school plan. All non-con member forms will need to be submitted via the electronic non-con portal accessed through your employer reporting account. One thing we've been asked to bring up is that if your school doesn't have someone set up to be the primary point of contact for submitting non-con information, we do need to have every school have at least one person to do this. I am going to link in the chat here the form that you need to fill out to get to that access. Like I said, every school needs to have at least one, but you can have multiple people in your office with the profiles to submit non-cons. So if someone has left who used to do them, there's a spot on that form for them to be removed. And like I said, everyone has to have at least one, but you can have several. So and we would ask that it is important that everyone who submits non-cons has their own profile, and that like there isn't just one profile that people use around the office to share to all send in the non-cons. If there's multiple people in your office that send those in, let's use that form to make sure there are multiple profiles. And then moving on here, I want to talk about a document I would imagine that you're very familiar with, the Employer Reporting Manual. We have made a few changes this year that we wanted to make you aware of. I'm putting a link to the manual here in the chat. But the changes that we made this year are that we updated the verbiage for reporting coaching and extra duty hours to Chapter 4. We added a section on bus drivers to Chapter 4. We added instructions for canceling an electronic non-contributing member form to Chapter 8. Previously, if you wanted to cancel one, it said to contact NPERS, but we've put in pictures and screenshots with step-by-step instructions on how to do that yourself without having to call in to us to do it. So check that out. We've updated. Obviously, there's a lot of things to update with LB 147's changes to reemployment there in Chapter 8. We also obviously we just put in the new business about electronic non-cons needing to be electronic on August 1st. And then one thing that I was really excited that we were able to do this year is that we were able to make any part where the manual references to itself. You can click on that and it'll take you to the part it's referencing. We also referenced you can click on the manual for where it mentions the form, and it should take you to our website where that form is, just to just make it a little bit more user friendly. And I was really excited that we were able to do that. So that's the new employer manual updates. If you haven't checked those out, I would definitely encourage you to do so. So with that, I am going to turn it over to Tony.
All right, so first off, Sarah wanted to let me or have me let you all know that she's no longer working in schools. Um, Something about her still having the same phone number and email. I don't know why she's worried about it, but what it's worth, there's that. Just gonna jump right in here. Um, there we go. All right, so it's been talked about enough, but the manual, obviously, as a reporting agent, it's one of the best places you can go if you have questions. Most things can be answered through the manual. It may take a little bit of searching, using the navigation built in, but it's a really nice resource. Most of your questions. One second. It turned off my phone. All right, so when it comes to compensation, I just wanted to cover briefly. I, if you go to the manual, it'll list out uh, everything that counts as compensation, everything that doesn't count as compensation. But what I wanted to touch on here is that for the most part, for most of your employees, what it's going to come down to is the pay for the time worked and leave that they used, right? Um, there's in general, there's a lot more to exclude than there is to include when it comes to this. If you aren't sure, quick shout out to the manual again, the 5-1. Like I said, it lists it all out for you. But if you aren't sure, if you're not sure if something should be reported or not, feel free, even after looking at the manual, feel free to contact us. Feel free to contact me. I never mind taking a call, and if you're unsure, it might save you an adjustment in the future, which is nobody's favorite. So the report's due on the 10th of each month. I know most of you know that because most of you get it in by then every month. The big thing here is if you know the report's going to be late, right? It's coming up to the 10th of the month, and you're out sick, you're having technical issues, whatever it may be. If you let me know beforehand, I'll work with you on that. I'm not just going to slap you with a late fee if I don't have to. But if there's no communication beforehand, if the report comes in on the 11th and I haven't heard anything from you, I am going to have to charge you a late fee. My hands are kind of tied at that point. So it's going to be late. Just try to let me know. The late penalty listed down there at the bottom, $25 and a percentage of your total contributions on the report, right? So if you're a small school, it's, could be 20, 30 bucks for a day. I've seen it 40 bucks, whatnot. If you're a big school, it could be 3,000. So just something to keep in mind that it is based on the total contributions of your report as a percentage. So you get that report into me, and in a day or two, you get an email from me asking about something, right? Why would I be doing this? Well, it's not for fun, I can tell you that. The majority of the time that I'm emailing you about your report, it is because the system has flagged entries or flagged your report as a whole. This is when you validate your report, right? What it's doing is it's checking for all the errors, and it's going to pull out entries that it finds suspect based on a lot of different criteria. The nice thing about this is you can see everything for the most part. You can almost always see what I'm going to be emailing you about, what questions I would have for you about the report. You can see it all before you even send your report in to me, which is pretty nice. And once you validate, that's the one that's the process that checks for errors. If you go back in there under edit, option 2 is employees with errors. You can select an individual entry there to see what the exact issue is. It may look something like this error message at the top. Now, if this is an error and something's not right about the entry, when you open up this, the individual entry for a person, this is where you would be able to correct it if you needed to. If no correction is necessary, I might just need confirmation that it's correct. On most errors, I'm going to need confirmation on something, right? And these are going to be things that I put in the file so that in the future, when auditing, when benefits comes in and looks at it, these notes, these things that I'm asking about, they're going to make the process go a lot quicker, whether it's benefits retiring someone or whether it's audit doing your audit. So on the entry, down at the bottom is that little note section. If again, if you have that error and the entry is correct, but it's something I'm going to need confirmation on or clarification on, you can leave a little note for me down in that box. I will always see it. I look at every entry that's flagged with an error, and when I open them up, I'll be seeing your notes. So that's if you're trying to communicate something to me about a particular entry for someone, this is where you would do it. Now, since not all of you deal with the flags, the errors every day, I'm going to go over a few common ones. I'm actually going to start here. Hours reported exceed defined upper limits. So this one's pretty simple. Any employee on a report that is going to have over 300 hours is going to be flagged. And I'm going to ask about it, or if you notice beforehand and you want to leave a note for me, this is what I'm going to be looking for. I'm going to want to know why. I mean, makes sense, right? Why the person would be having over 300 hours, because that's a lot of hours per period. This example, someone had 310 hours reported, 160 hours for teaching, super common, 150 hours for track coaching. I know it seems simple, but that's generally the type of response the hours breakdown that I get, and that's perfect. That's all I need. Just some sort of justification for the high hours. If if there's multiple, if there's 3 paychecks in a month, 1 month, that would be something, and there's over 300 hours because of that, that would be something that you would put in the notes. So see it beforehand. Social security number exists, but first and or last name is new. Now this is super common, and it is almost always a marriage or a divorce. If you see this arrow, all I'm going to be asking about it, unless you have a note again, and all I'm going to really need to know from you is why the name changed, right? So just such and such married, previously was such and such, and that's all I'm really going to be asking for from you. Hire date must be within 1 month of pay period begin date. Now this is a little more nefarious as a flag on your report, because this will not just pop up as an error, this will suspend your report. And that is an issue because when it's suspended, you're not able to confirm. So what this is telling you, hire date must be within 1 month of pay period begin date. I mean, it's pretty much like it sounds. It's expecting a hire date within, if it's on the June report, it's expecting a hire date not older than the 1st of May. Where this causes issues is, for example, someone hires a para a year ago, right? Or you hired a para a year ago, and you're just now enrolling them in the plan, and they've been working for a year, so their hire date is not within 1 month of pay period begin date. So what this is actually wanting from you when it says hire date, it's not actually interested in the hire date. It's not actually interested in when you hired the employee at your district. It is interested in the first day that an employee worked, that they got paid for, and that retirement contributions were withheld. That is going to be what it's looking for. 99% of the time, you update the hire date for a member, to that, the first date of contributions being withheld. Your report should unsuspend, the error should fall off, and you should be all good. Now, hours worked reported to 0. This is the most common, especially right now during the summer. So this is going to appear on any entry that has contributions listed, but does not have any hours. Pretty simple. So in the summer for teachers, they're not working. I often see, this is the one time, as Vanessa was talking about before, this is the one time for now that we accept, we'll accept this error, because the vast majority of teachers at this point do get paid over 12 months, don't work over the summer, and that's fine for now. Where I've seen this be an issue during the summer is actually when I don't see any of these come in on a report. Um, and that's because, again, most schools have teachers that aren't working, right? So I've seen a couple cases this summer already where there was just 160 hours filled for all employees. Don't do that during the summer if they're not working. If they're not working during the summer, 0 hours. I'm not going to ask about it. It's going to be the end of it. A lot of times when this error is on a report, it is just because hours were missed, right? Happens, whatever. If you see it in that case, you can update the hours in option 2. Where this becomes a bigger issue is when it's not something that needs to be corrected per se, because it's, well, say you have a leave of absence, right? So oftentimes when I'll ask about the 0 hours, I'll get back a response like this. Um, now, this is not usually going to be a response that's going to end the email chain. This is usually a response that's going to uh, start another email chain, and I'll go over that here in a second. So just to set the stage, so we're all on the same page here, all at the same starting point, under the same assumptions. I'm going to read just an excerpt from the 2019 audit newsletter that covers leaves of absences, maternity, FMLA. If you're curious about, if you want to refresh on leaves of absence or get some clarification, it's on our website. It's 2019 audit newsletter, not a bad place to start. So we have seen situations where an employee is on an unpaid leave, but the school transfers a portion of their future compensation to the current payroll period and docks future compensation. This is an unpaid leave, and no hours or compensation should be reported for that pay period. NPERS needs the actual hours worked and the corresponding compensation for each payroll period. Now, what this is saying, the upshot of this, is that if someone's gone for an entire month, they and I should say, and they're not using any paid time off. If they're gone for the entire month, no paid time off, they should not be on your report. They didn't work at all. They were not compensated for any of that work. 0 hours, zero compensation. So the question, and what this kind of brings me to, is the question that I ask myself when I get someone lets me know that someone's out of maternity leave. The questions that I ask myself, and the question that you might ask yourself as well, is if you have that 0 hours and it's for a leave, right? Again, that means compensation is reported, hours are not reported. You should ask yourself what the compensation is for. Because if the compensation is for paid time off, then you shouldn't be getting that error, because you should report the hours for paid time off, the sick leave, whatever it is. Those should all be reported along with the compensation that they're attached to. If the compensation is pay docked from future periods, you also shouldn't have that error, because there shouldn't be any compensation there. Because again, they didn't work at all, no paid time off, they shouldn't be on your report. Simple as that. So I'm going to go over a quick example, just kind of bare bones, to kind of illustrate how this would look in practice. So Stella's out of maternity leave, but has enough paid time off to cover her through January 14th. After this, she goes on unpaid maternity leave until returning to work March 1st. Stella normally works 160 hours a month with $5,000 per month salary. She's paid her full salary for February and is docked equally over 5 months after she returns. So how do we report this? Well, first off, the first thing that we always want to make sure we're doing, if someone is going to not be on a report, which Stella will be missing a report here because she didn't work at all in February. If someone would normally be on a report and they're not going to be for some reason, we're going to want a non-contributing member form. And that, you can fill it out. It'll have an option for leave of absence. It's kind of what you're going to be working with there. We're not going to report the hours of compensation during the time frame that the employee is out on unpaid maternity leave. Again, that would be February in this case. And we would continue reporting hours and compensation when the employee returns. So that would be the 1st of March. So this is how we would report this. We have, she worked half time in January, whatever, 20, half her salary, half her hours, or that's when her paid time off ran out at least. February didn't work at all, 0 hours, 0 compensation, was not on the report, and then the next 5 months as a normal salary reported. And you may be thinking, but it said that we were docking pay, and we are. So the top option is how we want it reported, but we understand that sometimes your payroll may not allow you to report it like that initially. Your payroll might end up leaving you with a situation at the bottom. So it looks like it was paid out, because remember, we paid her full month salary in February. We docked it from the future periods because we wanted to be, we didn't want her to not have a paycheck when she's out on maternity leave, and that's fine. It happens. Almost every school does it. The big thing to remember is if your payroll, if you dock pay and your payroll looks like the bottom, we're gonna need to eventually fix it so it looks like the top. So we would do this with adjustments. Adjustments are how we are going to change anything that was previously reported to us, and it's the only way to do it currently. It is, there's a few steps to this. Plug the manual again, and this is what I always, if you call me and ask me for help with with the actual process of, what buttons to click to enter the adjustments, probably going to be directing you to the manual 6-50, because that actually lays it all out step by step with screenshots. It's very, very nice. That being said, of course, if you take a look at that and you do have questions, I never mind. So the first thing that we're going to need, if you're going to be doing an adjustment affecting, changing something in a past period, we are going to need you to fill out an adjustment form and get it to me somehow. You can mail it, you can fax it. I prefer email just because I know that way it gets to me. But the other forms, they work just as well. So once you send me the adjustment form to me, and that's your documentation. That's telling me exactly what you're going to change in past periods, and that gets put in the employee's file. So later on down the line, when audit takes a look, they'll know exactly what was going on and why. These adjustments, following the steps in the manual, they'll have you add them to your regular monthly report. It can just be the next monthly report. If that's not convenient, it could be the one after that. One thing to note is that depending on how old the adjustment is, late interest could be applied. Now, this late interest, it sounds like a punishment for it being late. It is not. What late interest is on an adjustment. So say, one that came up recently, say you're adding, $10,000 worth of salary back to 2002, because an audit makes you or something. Well, that employee's, his contributions would have been in his account, and would have been earning interest over that time period. The late interest, if it gets applied to an adjustment, is again not a slap on the wrist for not getting it on time. It is the interest that the employee would have earned had the contributions been in there, been reported correctly originally. So it's really just getting the employee what they're due. So this is a nice little resource here. This is a page on our website. thought I'd show you where to get the adjustment form right down there. This is also just a very nice one-stop shop for all of our forms. Pretty much anything that that I would be asking you for would be on this list here. So whether you like to bookmark it or just remember where it is, it's a pretty good resource to have. So you also save forms. One thing to note about that is our forms do get updated occasionally. The best way to make sure that you always have the most recent would be to go straight here and pull it from our website. I wanted to talk about the adjustment form in particular a little bit. So when you pull this up on our, we go to our website and you grab this, it is going to be a PDF that allows you to type everything in. I much prefer that to handwritten because that will do all the calculations. If it's all handwritten, I might have to redo some of the calculations by hand, or it may not, it's easy to make a mistake when you're doing stuff by hand. If you open up the PDF and just put it all in, just type it all in, you don't have to do any of the math. It does everything for you. It parses out the employee contributions, shows you the employee and the employer at the bottom and totals it. Very nice, very user-friendly. Would highly recommend using the PDF. So I just wanted to, so a few things here that I wanted to talk about that are kind of neglected often. Submitted via the web on the blank wage and contribution report. So because you are going to be adding these to your normal monthly reports, this is how you let me know what report it will be on. It is not always obvious that there are adjustments on a report. Sometimes I can tell just by looking at the summary. Other times I don't. So the best way to make sure that I know is just if it's going to be on the July report, 7/21, and it's honestly it makes a pretty big difference to me. Helps me keep track of things. The explanation of the adjustment, also often sadly neglected. This little section, we need some sort of justification if you are going to be adjusting past periods. Again, when benefits looks back at these adjustment forms, they often do. It's going to help quite a bit if they know why the adjustment's taking place. It doesn't have to be an essay, just if it's hours were underreported in May, that's all it has to be. But that's another thing that's neglected, but we appreciate a lot. So what I actually wanted to talk about here, when you, and this is because I see some amount of confusion with this, when you're entering the adjustments on your report, following the instructions in the manual, it's going to have you add an entry. So this little tab up at the top here, this says adjustment. It's a little drop down. People will, they'll create an entry and they'll go to try to change the dates right below it. They'll try to change those dates to the correct period and it won't let them. If it's not letting you change those dates, it is probably because the little drop down at the top is defaulted to regular. If it's regular, it's going to assume it's on the normal report. And it's not going to let you change those dates. So you just want to, drop it down, hit adjustment, and it'll let you make the dates whatever you need to. So the employer contribution rates. These have not changed. So why am I bringing them up? Well, because these errors are quite common. Contribution amount does not match percentage of salary defined by the statute. So this is going to be an error that is on it's going to be on an individual entry, but it will suspend your entire report. basically, if you get this error, all you should really need to do is if they have compensation reported, all you really need to do is multiply the compensation by the 9.78%. That gets your employee contribution that it's expecting, so you can throw that in the box. Now, I've had it come up where, for whatever reason, people try not to, or they don't want to include the employee contribution because they think it was previously taken care of or whatnot. The employee contribution, it always has to be the 9.78%. It's not going to accept, like, you can't even confirm your report if it's not that 9.78%. So if the compensation on the entry should be there, there will always have to be the 9.78% contribution along with it. Now, the amount entered for employer contribution is not within allowable range based on employee contribution. So, the employer contribution, of course, 101% of the employee contribution. Easiest way, if you're getting this error, the easiest way to check what might be going on is go to your totals page, look at the total employee contributions, and you are going to multiply it by 1.01. That's going to give you 101%. And that's the only thing that the system will accept for the employer contribution based on what is currently on your report. I will note, anything you change on your report, if you change an entry, it never auto updates the employer contributions. So if you say you run your payroll, you upload your report, and then you delete somebody, you're going to be getting this error when you try to confirm. I actually just talked about most of this, but one thing to note, for the employer contribution errors, you would, when you're in work on ER report, how you're going to fix that, you're just going to go to update header, and then you're going to see a section that's employer contribution. It's not on the individual entries. It only appears in your header, and that's the only place you can update it. So, wanted to talk about the forms we need for every single terminating member. Now, these do not change. Every single person that terminates with your school district, right? Not switching position at your school, not switching from one school in your district to another school in your district. Anytime someone terminates, leaves the district, we're going to need a non-contributing member form, now online, and we are going to need a employer school plan, early retirement inducement, and termination certification. That is a mouthful. Those are the two things we're going to need from you. The employee side of the inducement and termination certification, it's not your responsibility to get to us, but we do ask that you get it to your employees, or at least make them aware that there's something for them to fill out, and make sure they know where to get it, and then they'll turn it into us. If one thing to note is if you already give your terminating employees the terminating member packet, the employee side of that of that form is going to be in there, so you don't have to worry about that as much. All right, so the new non-cons. These are actually things that have not changed, but I see quite a few issues with. So these dates on the non-con here, the final compensation and service hour reports, are not non-consequential. They need to match what you have reported to us. So, super commonly, someone's final hours will be on the June report. Someone's final compensation will be on the August report. That's great. But we just want to make sure it doesn't match. It doesn't have to match with the months that they actually terminated in. It has to match with the reporting periods. So what, so if it was reported in May, or they terminated in May, they're paid their final paycheck in May, but it's going to be on the June report. That's going to have to be 6/2021 for the compensation, the final compensation. Oh yes, and this is really important. If I see it on your report, it's not going to be something that if I see an error here, the dates don't match up. It's not going to be something that I'm going to wait to. I'm not going to hold your report. I'm just going to let you know, and that's it. I don't use it for much, but the thing is, when your member goes to retire, when they go to draw a benefit, our benefits department does look at these, and they do need, if the dates don't match, if it doesn't match the the reports, the final compensation, final wage, excuse me, final compensation, final hours, if the reports those are on does not match the non-con, it could potentially delay someone's retirement, which nobody wants. Termination date here. So this has remained the same. If you remember the non-contributing member form, the paper form, the first side would be the side that, or the first page would be the page that you fill out. The second page would list a bunch of criteria and help you determine a termination date for somebody. All that criteria still applies, and it's all in the manual, starting on page 8-5, I believe. So, if you're not sure exactly what someone's termination date should be or how to report it, the manual, page 8-5, I mean, it'll clear that right up for you. So the last thing here I wanted to talk about was the employer side of the inducement form. Everything's pretty self-explanatory here, with the exception of number 4 here at the bottom. There was no prearranged agreement. There was a prearranged agreement, but attach a written description of the prearranged agreement to return to service to this form. That's the part that trips people up. That's the part it's pretty vague, pretty nebulous. All we're looking for here from you, we don't need you to hunt down, if you know that they're transferring to another school, we don't need you to hunt down their contract. We don't need to know the details. We just need to know when you are filling this out, what you're aware of. So if you know that they plan to go to, they plan to go to such and such school in the fall, that's all that the written description would really need to say is such and such planning on going to such and such school in the fall. And if that changes between, before the fall, that's not on you. You put down what you knew at the time, and that's all that we're asking for you here, or from you here. That is all I had. Thank you.
Okay, thank you very much, Tony. I got a few more things here, and then we will just kind of wrap up and take your questions. Share my screen again. There you go. Okay, so we just want to hit reemployment after retirement. This is always something we want to go over quite a bit. So here's a pop quiz, and just a warning, my pop quizzes are not as easy as Vanessa's. All of her answers are just yes. I don't know if you caught that or not, but so here's a pop quiz. In order to receive a benefit from your retirement plan, you have to do one thing. What is that one thing? That one thing is, I'm sure you're all shouting it at your computers right now. It is you have to stop working. So on paper that seems really easy, but we realize that this isn't always necessarily the case. But to stop working means that not only do you terminate employment, but it's a bona fide termination. So, for example, maybe someone, if they quit on a Friday, but then they come in Monday to volunteer, and then they do so for 6 months, same job, same office, same phone, and then in 6 months, you wouldn't believe it, luck would have it, that person is hired as their own replacement with a hiring bonus that's just kind of looks like 6 months worth of pay. Is that a bona fide termination? Absolutely not. Is that acceptable? Absolutely not. Is that a made up story? It is not. So that's why we kind of hit this pretty hard. Bona fide termination is a minimum of 180 calendar day break at all participating employers with no paid or voluntary service done during this time. When you break this rule, it doesn't just put the person breaking the rule out of compliance or the school out of compliance, it puts the whole plan out of compliance. So this is something that's really, really important. There is, of course, as we've already talked about, a voluntary or substitute service exception. So subbing and volunteering is allowed during that 180 days if service is intermittent. So not more than 8 days of service in a calendar month. And that day of service is any length of time, 5 minutes to 8 hours. So that is allowed, that substitute or voluntary service exception in that 180 days. Now, what you can't do is you can't combine 8 subbing days and 8 volunteering days. That is 16 days. You can't do 8 days at one Nebraska school and another 8 days at a second school. That is 16 days. You can't agree to train your replacement. That's a pre-arrangement. Um, if your replacement were to, if you were to retire, your replacement were to call you and ask you a question about job function or something like that, that can be fine, but it would count as one of their days of voluntary service, that 5-minute phone call. Refereeing, officiating, or coaching, those are all considered regular employment and are not allowed during the 180 days. Prearranged returns to service are also a big no-no. What these tend to look like is maybe Coach Lasso telling administration that he's going to quit and take his benefit, but don't worry, he'll be back to coach soccer next year. This is not a bona fide termination. People do this a lot of times to circumvent that 180 days that they're not supposed to be working, and it includes any written or verbal agreements made prior to the 180-day break. And here's the thing, we talk about reemployment after retirement so much because the consequences of a non-bona fide termination are pretty steep. When this is found out, it's not usually found out 2 or 3 months after the fact. It's found out through audits 5, 6, 7 years after the fact, and by the time, and every penny that has that you've been paid at that point needs to be paid back, usually with interest, and it needs to be paid back as an IRS tax debt. It's not something that you can bankrupt your way out of. And these are typically not small amounts because of the length of time it takes to find them. Numbers from cases I know of are $350,000, $450,000, $750,000. So those are amounts of debt that will ruin somebody's life. So this is why we talk about it so much. If you want to be reemployed after you retire, there is a correct way to do it, but doing it within that 180 days is not the correct way. Having a prearranged return to service is not the correct way. But if you have a bus driver who retires, they make a clean break, and after 6 months they realize that fishing is as boring as everybody always says it is, or maybe they're tired of crocheting or whatever, and they want to go back to work, they are welcome to apply for that job and get that job. At that point, they would just basically be a new employee. So they would start putting away that 9.78% of salary. They would be in tier 4, and he would also still be getting their payments from their previous account. So reemployment after retirement is okay. We just need to make sure that it's done the right way. And then here are just a few reminders that we've already talked about, but they are important, so I'm going to go over them real quick again. Again, actual hours need to be worked hours, not estimated hours, not like, like with the specifically like not bus routes. We need to know the hours actually worked. Not all non-con member forms need to be done electronically beginning August 1st, 2021. The new substitute definitions, intermittent basis, no more than 8 days in a calendar month of voluntary and or substitute service provided on a day-to-day basis with no prearrangement. And day of service means any length of voluntary and or substitute service provided during a single calendar day. This is again whether that service is 5 minutes long or 8 hours long. And then again, you've heard us say it several times. Regardless of category, all employees must have their hours tracked every time they render service at the time they render service to document eligibility and ensure that they are receiving the correct retirement benefit. If you haven't spent too much time on our website, I would highly recommend that you go make yourself familiar with the resources we have for you there. We are constantly trying to update that with tools to make your job easier. We've put a lot of those tools, links to those tools in the chat today. But the ER manual is there, the calculator tool, substitute logs, extra duty logs, ER newsletters, all of that stuff is there. So really, if you haven't spent much time on our employer reporting part of the website, really go look at that. Check out the resources we have for you there. Um, I really think that we've got some good stuff. And then last, if you have questions after you leave here today, here is Tony's contact information again. I did want to note he mentioned that he is not Sarah. Sarah has moved on, and Tony does have a different phone number than what Sarah used to have. So I want to make sure and take note of his information there. Uh, he would be the guy you want to contact for your everyday questions and issues. Vanessa, and Jonathan's information is earlier in our presentation, but again, they would be your contacts usually when you're having an audit. Tony would be your normal contact for your questions. So with that, that is all we have today as far as our presentation goes, but we have been collecting these questions here as we go along, and we're going to spend some time answering those now. If you do have more questions, feel free to keep putting them into that Q&A panel as we go over the ones that we've already gotten. If you have no questions and you've gotten what you need to get out of it, you are welcome to go at this point. Thank you so much for coming, and I again ask that you fill out that survey as you go. But let us start getting to this first question here. All right, I'm gonna let's see. Okay, go up to the top and just Jonathan answered. If you did ask a question, Jonathan's been answering them here as he can. So you might check and see if your question's been answered. But if I don't see an answer on these, I'm going to go ahead and ask our panel here and let them get your questions. So this says an employee was a full-time para for 2021 and enrolled in the plan. She has resigned to attend college, but will substitute during 2021 and 2022. Does she remain in the plan?
I thought that that one was answered, but I will go ahead and just give a verbal confirmation on that. So we need to make sure that an employee has a bona fide termination. Okay, so what that means is that for 180 days, they have intermittent, voluntary / substitute work. Jeremy defined that now for that LB 147 is 8 days. So we know that that's 5 minutes or 12 hours. It doesn't matter. So during that 180 days, that is all they can do. Volunteer their time or substitute for no more than 8 days per month. The other caveat to that is that there can be no prearranged return to work. So what I would ask is, in this scenario specifically, is that prearrangement to return to work? To me, it sounds like it is. I don't see the question, so I don't remember the exact dates on that. If the return to service was after the arrangement of that return to service was after that 180 days, so they had quit. I think the question said the year 20 to 21, and now they're talking about coming back, then we would be okay. So as long as we had that bona fide termination, that's what you have to look at.
Okay, and then we have one here from Julie. If an employee quits, but say they will sub through the school year, I assume we fill out the non-con form and inducement form that they quit, but when they sub, they still stay in the retirement plan. Do we need them to refill out the retirement forms again and send them in? Non-con, I'm going to send that one to Tony.
So there shouldn't be anything, if they terminate with you and they decide to come back and sub, we'll need those two forms, but when you enroll them, we don't, there shouldn't be any additional forms. We don't have an enrollment form. The closest thing is maybe the beneficiary, but that's recommended and not required. So if someone comes back, there shouldn't be any additional paperwork. You should be able to just, um, you know, start putting them back on your reports.
Then we have a question. How would you answer a teacher who says, I work 8 hours a day as a teacher, however, at home in the evenings, grading papers and such, why can't I report and be paid for those hours?
So Vanessa, correct me if I'm wrong, but I believe that they can report those hours, right?
When that question has been asked in the past, I think we all understand that teachers probably work way more than 8 hours a day, right? So I always put that back on the school district. If you guys, their compensation is their compensation. That's in their negotiated agreement. That's their salary. So that's going to be, do they get overtime? What's in your master negotiated agreement? I would say most of the time it's a salary. You don't get overtime. Here's your wage. However, if they are working extra hours at any point, coming in at a different time, working wherever, they can absolutely, I would say they could track those hours and you could subsequently report them if they provide you those hours, their hours worked.
But as far as actually being paid for that time, that's more up to the school district. We don't really have a say in that.
Roxanne says, where do I find the survey? I missed that and can't find it in the above chat. When you exit to leave the event, it should pop up in your screen there. So if you're still here, you wouldn't have seen it, but if you exit out, it should pop up there for you to fill out. Jennifer asked, an employee is hired during the summer months while out of college. They are to work 40 hours a week starting the end of May and quit the end mid-August to go back to college. It is unknown if they will return the following summer. Do they turn into retirement right away, or do you determine off of 3 months in the retirement plan year?
So I'm going to take a
Jeremy,
sec
I
to read
think
that.
Jonathan answered that as well. Are you seeing the answers in the Q&A?
I am not. No.
Okay, that
So,
one should be answered as well.
okay, very good. Well, I think we have all of the questions answered so far there. So again, I thought a couple people did put some questions in the chat that, again, is pretty hard to find. So if you did put a question in the chat, I would ask if you would go ahead and put it in that Q&A panel. We did just get a new question in here. Please clarify more on extra duty. So if you have a full-time employee that does football, their extra duty pay must be paid in the months of service, and then that same teacher does track. So when they get that extra duty in the spring, they're doing track. We are not supposed to pay extra duty in 12 monthly installments, question mark.
Yeah, how the legislation is set up, technically speaking, it should be reported in the months that it was earned. Um, it's yeah, that part of the legislation is pretty clear. And that's something that when you look at your 2022 contracts, you know, I know a lot of those get signed in March, but when it, you know, when it comes to putting those together, that's going to be something you're going to want to look at is paying installment payments, um, or not installment payments, paying stipends and like coaching and extra duty over 12 months. That's going to be something you might want to consider reworking in those next year's contracts.
If I can add a caveat to this, I understand that this is maybe a different message than what everybody is used to. And this is what I can tell you. Again, COVID brought forth a lot of things. We'll go with that word. With that, some are good. We can talk to you on this forum. And with that, there was some nightmares as far as auditing and after COVID. And so when we sat down and we looked at what our message is and what are the state statutes and rules and regulations and how can we apply this, we did that because the audits that we were doing, we always seemed to pull a track coach. And half of the time, these track coaches were already paid for services that weren't rendered. And how do you do that? How do you reconcile that? It just made for a nightmare on our side. And then we are trying to have a lot of agency consistency and trying to help the members as well as all of our employees. And I can tell you the amount of time that our benefits department spends having to reconcile when wages were earned on the back end to A, look at capping, to B, look at what your benefit's going to be, to C, get the payments out in a timely manner. Reconciling when wages are earned is an insurmountable amount of work, and they are already doing that for a base salary, right? That's the exception. Ideally, everyone would go back to their boards and they would amend their master negotiated contracts, and everybody would just be paid across the board, base salary, everything at the time in which it's earned. It would make it easier from the front to the end. Retirees would get their benefits faster. It just would improve everything. And so we understand that this message may be a little different. What I can tell you is that I have had so many audits, and so is Jonathan, where this is actually what people have been doing since day one. And we get that people have contracts and they have to do what their contracts say. So that's why we are offering, maybe you change contracts, maybe you look at the wordings and you adjust it so that statutorily speaking, you're in compliance with the retirement system. Again, you guys have an amazing retirement system. But again, with that comes all of these rules. So to make it easier for you, maybe that's something you look at. You can adjust your pay for the extra duty so that you pay when it's earned. So then it's automatically reported when it's earned, or you can go back and you can make adjustments. But in the end, it has to be reported when it's earned for that extra duty. So we may not catch it right away, but when it comes time for your audit, that's going to be a very big significant finding.
Right, and that's something that, you know, looking at the contracts may seem daunting, because I know there's a lot of stipends, there's a lot of extra duty, stuff like that, but it really is, it if we can get it worked out so that it's paid when it's earned, it's really a win for every single person because it uh, for those of you who have done adjustments, those are not very fun. And there's uh, reporting it when it was earned saves probably half of adjustments that come into me are just fixing this, and that's a lot of time on your end. Again, it's something that would delay the benefit for the member, and it's something that creates more work for us here. So moving in this direction really is a win for everyone involved.
Okay, Nancy has a couple of questions here that I wanted to get answered. What happens if you're in the school as a contractor or a consultant for another company? So I'm guessing this is a bona fide termination question. Um, that feels like a facts and circumstances matter. Contact us with the
Yep.
situation sort of an answer to me. As does her second question, can you work for a university such as UNL or UNK as a supervisor for a new teacher and you're back in the original school you retired from? So I would say with both of those situations, you would want to call
Yeah,
and
we'd
look at
like
the
a little
facts and
more.
circumstances. Yeah,
Sorry, a little
no,
more
go ahead.
information there is we're going to be asking for the details there because that's something that uh, the wording or one little thing could change what the answer is there. Um,
Okay. So we have a person that is not full-time employee and does extra duty. Must their extra duty be paid within the months they're doing the extra duty? Are we allowed to give them one payment on the last day of service, last time of month of service, I'm guessing is what you meant.
So hopefully we have answered that already.
Yes.
Ideally, we are paying them when the service is rendered and when the wages are earned. If you can't do that, then the adjustment report is what would need to be filled out, the adjustment form. Sorry about that.
Right.
And Jeremy, I just want to say really quick too, so we don't forget, we had 3 additional questions that I was going to
Yes.
answer in my presentation that I didn't, but so just whenever we're done with these that were presented before.
Absolutely. Why don't you do that now while we wait for a few more to come in because we're caught up as of right now. So
Okay, perfect. So we, you might have went through this one similar to this. So there was a question posed, but everybody was offered the chance to ask questions before the workshop, and hopefully I've got them all here. I think I answered a few of them during my presentation, but there was a question posed about stipends for attending ESU classes on their own time through grant reimbursement programs. Unfortunately, that question would require a more in-depth conversation as to the specifics of the stipend. As our legal counsel would say, the facts and circumstances are highly going to matter in this case. So if anybody is dealing with stipends, has questions about stipends, please let us know. And that's something that we can work through together on an email or a conversation piece. There's just so many different fact patterns that would change how that question is answered. So there was another question. A full-time hourly employee resigned from their hourly position, but wants to keep an extra duty coaching position. The last working day as an hourly employee was in May and will only be coaching from August to October. Do I need to keep the retirement deduction for this employee? So we'll go over that bona fide termination again. 180 days of the voluntary intermittent substitute service. Now that's further defined as the no more than 8 days with no prearrangement to return, right? So this is a prearrangement to return, so contributions should be withheld. I do want to say this seems to be a common question about coaching. Coaching is seasonal and it is not ineligible. Coaching needs to be tracked for their hours. Outside of this scenario, make sure I clarify that they need to be tracked for their hours and then put into the plan. should they meet eligibility. The last question that I have that was not answered is, and this is a very good question, so I hope everybody is listening here. How far back can or should we adjust an employee's wages and hours when we discover that they should have been eligible for retirement? Okay. Statutes clearly define several things for us for time limits. We have time frames that we look at all the time. Let me be clear in that if somebody is eligible to be in the plan, but they have not been enrolled, there is not a time frame. So without answering this question specifically, what I want to do is pose a question to you and your school. So how do you want to conduct business? That would be my question for you. We get a lot, which when I started here, I thought everybody knows when they're enrolled in retirement, right? Everybody looks at their paycheck stubs and they see the contributions being taken out, and they know they're looking at their retirement, and wow, but people don't even realize. Some people think that they've been contributing for 20 years and they have not been. So I think that's something that we need to realize when we talk about this. So what NPERS has seen is employees that have come to us and said, hey, what about my service credit for the last 20 years? And we have to look at them and go, what do you mean? Right? What hours did you work? What compensation did you enroll? Did you have contributions withheld? And ultimately, they should know, but a lot of times they don't. So look at yourself as an employer and go, is this something that I want, coming back on me, that I'm not enrolling people when they're eligible? And so that's why we are hitting this hard. That's why we're bringing up that eligibility calculator. Do it on the front end. Pull that up, and it is case by case. You answer the question and it will tell you exactly, do I enroll them or not? I wish there was a way to print it out, but maybe write out the questions, answers that you did, throw it in their file to prove this is where we were at the time. This is why I did or did not enroll them. But if you find that employee should have been contributing and never was enrolled, then I would enroll them. I'm not going to give you a time frame, but I'll tell you that there is not a time frame. I can tell you in my audits that if I find that, I have you enroll them 9 times out of 10. Again, facts and circumstances. However, if somebody is supposed to be enrolled and they weren't, that's huge. These statutes are set up to protect our members and to make sure that they have retirement at the end, that you guys have diligently worked your entire lives at this school district, and you should have something at the end to show for that, and be able to financially afford that. So again, I'm sorry I'm not specifically answering that question, but I hope that helps. And Jeremy, that's all I have for the pre-questions.
We
All
had
right, we
a
just got one more in here. Um, can the employee estimate their extra duty hours for each activity if they are a full-time employee?
so estimating hours, maybe a little more Vanessa's ballpark.
Sure, absolutely. So when we do an audit, we look at reasonableness, right? When we understand that for a teacher, sometimes you guys have in your contracts, it's a 6-hour day, 7-hour day, 8-hour day. It's based on your calendar. Is it reasonable that they've worked 8 hours a day? So taking that over and beyond, is it reasonable to assume that a game, now I never played football, so I don't know how long a football coach is gonna work for a football game, right? But I think we can use some reasonableness to it. Ideally, we're going to take that extra duty log and we're going to put in the time that we started, the time that we ended, and then there's no guessing in it. And then everybody gets the benefit they're entitled to. Goodness sakes, if something happens in the middle of the year, I know these coaches, the hours that I have seen are crazy amount of time. Get get compensated, get your service credit for the time that you're putting in. So I would say I think it's probably better to just use the extra duty timesheet. But there's some reasonableness in it as well.
All right, and we do seem to have answered all of our questions that we have so far. We will hang out here for a few more minutes. We have more time allotted for this. So again, if you have more questions, feel free to put them there in that Q&A panel. If you have no more questions and you need to leave, we really do appreciate you coming. We really do appreciate all that you do to make sure that we're getting that accurate information, and realize that job is difficult, and just really appreciate you doing it. And I would really also appreciate you fill out that survey. But yeah, we're here to hang out for a while as long as people are still asking us questions. So get those in, and happy to discuss. Gayla asks, what if you have someone that isn't a full-time or part-time employee at the school, but they're hired for a coaching position? Do we need to report hours and wages for them? Tony.
So it it sort of, I mean, it sort of depends here. If you need someone for that 3 months, and or which is a normal coaching season, um, essentially they have to meet all the same criteria as anyone else for mandatory retirement. I'm just reading the question again. Sorry.
I think I can help that too. So this is where you use the word report. So I'm going to take the word report out, and I'm going to change that to track. Okay, just to answer this way first. So do you need to track hours for them? Because here's the deal. If you have a coach, a lot of people refer to these as their community coach, maybe. It's an outside member. They only come in to coach. They're not employed any other way. Again, they're not ineligible. Okay, so we have to track their hours. The next question would be, are they temporary? Did they come in and do it one time and that's it? They were hired just for that one short time. Coaching season's over. They didn't work the year before. They're not working the year after. We could say that's temporary, right? But we still need to track the hours so we can prove that. If they come back the next year, that was not a temporary gig, and that's now a seasonal ongoing, and so we need to track those hours. Tracking the hours, that, I mean, I know it sounds so simplistic, but that is going to help us determine so many different things. Is there an employment status change? Do they go from temporary to ongoing? How does that work? So you would only report hours and wages if they were actually in the system and contributing. So that was something that wasn't clear before, and I thought I hit on that before, but let me just say that again, because I know we've thrown so much information at you. So when we're asking you to track hours, that it's as simple as that. On your end, we need you just to track the amount of hours people are working. Then to further that, if they are a member, then that's what we're going to report. So we're going to take those hours that you tracked, and now those are the hours that we're going to report. So I hope I answered that the way I should.
Yeah, I have one more thing on that. If you're unsure when it comes to temporary, if you if you hire someone with the intention of bringing them back if they do well, um, that would not be considered temporary when it comes to coaching. Get that question a lot, so I just thought I'd throw that in there.
All right. I have a question here that let me say, someone asks, when will the recording be available? We will hope to have it on the web by the end of next week. So as soon as we get it back from WebEx, we will edit it and put it up there. So you could definitely expect it by then. Will the printed Q&As also be available? We will kind of put together a document of the questions from this and the answers that we gave that we'll send out to people whose email addresses we have from this event. Um, I'm going to throw this one to Vanessa because I think she has a great answer that I've heard her give for this one. Along the lines as the last question, what if teachers refuse to turn in extra duty hours when requested?
All right, here is my standard. We all have our boxes to check, right? So we are checking our boxes by giving you these tools and providing you the information, and then going back and auditing from internal audit and making sure there's compliance. And from the benefits side, they have to go and do an audit at the end and make sure you have the proper years of service and compensation is reconciled where it needs to be. So here's what we need from all of you, because man, I understand. I can tell you that I have learned as much from reporting agents as hopefully I have taught in return. That your job is hectic, and this is a tiny piece. And so we are asking you to use different definitions for us, for your employees, and we're asking you to apply different time frames, right? And different rules and regulations, and then you are not the decision maker. So what can you do? And you're telling everyone, look, these are the rules, but nobody is listening to me. And we get that. So before I answer this, this is what I want to tell you. A lot of the tools that we have created from internal audit, we work with our legal counsel on everything. And so we want to provide you with the best information, and we want to make your job as easy as we can make it. And in doing that, if you have something that would be helpful for you, let us know. I can tell you that is where all of these tools have come from, is that if we have reporting agents that say, oh my goodness, I can't get X, Y, and Z, or I'm struggling with this term or this rule, or whatever, the extra duty log, that second tab that explains extra duty and the statutory obligations. It writes out statutory statutes, and then it gives examples for the employee, was written specifically for reporting agents to hand over to their employee to say, look, I'm not just saying this, it's in statute, it is required, and here's why and how it can affect you. So we are checking our boxes and we are saying tracking hours is a big deal. And this is going, I'm telling you, this is going to be NPERS message from when you talk to accounting with Tony, to the back end when you get an audit with Vanessa or Jonathan, into the benefits department when you talk to one of our countless amazing benefits representatives. Our message is going to be that hours need to be tracked when worked. So you provide, we've checked our box now, right? NPERS is good, check. We provide you the information, we provide you the tools. You give these tools to your employees. Check, but your box isn't completely checked. Here's what you need to do. Show us that you have tried. Show us that you are enforcing. So you go back and you look at your contracts and you write it into the contract. You write something in the contract for your hourly that says if you don't turn it in, you're not going to get paid for it. Or you write something into your contract that says if you don't turn it in, know that this could directly affect your retirement service credit. And then, super simple, but it's another way to show when it's your turn for audit. See, I'm telling you already, like, I don't want there to be hidden secrets. I want you to know how we're going to work it and the best practices for you. Put a monthly email reminder in your calendar to send out a mass email to all of your employees that says, reminder, extra duty hour logs need to be turned in. Right? And so I'm not asking you to go out and hold their hand and make them fill it out, but do what you can to show that you've done what you can.
Okay. Julie asks, if you have a coach who does not have enough hours to be put in the retirement plan from previous years, and all of a sudden a coach receives pay for 3 months of service in the current year, and they turn in their hours and you realize they should have been put in the plan. We are supposed to enroll them as of the next paycheck, but in this situation, they won't be getting any more checks for the rest of the year. What do we do?
It's a good question. I don't actually know the answer to that one. If uh, do you know, Vanessa?
Yep, so it's the next payroll period. So the next time they work, contributions are withheld.
Yeah.
If they're a football coach and that's all they are, and they meet eligibility, then next time they get paid, we take out contributions.
Sure. So even if that's the next season, that's when it would happen. Okay. Very good. And I think we're caught up on questions again, but they kind of are trickling in here, so we're gonna hang out until they stop trickling in. So if you have more questions, feel free to put them in there. Again, if you don't, thank you so much for coming. We really do appreciate it. We uh, hope that this was a nice option for you to not have to get out, be able to do this at your desk or at your home, wherever you're at. So please fill out that survey on your way out. But again, if you have more questions, that's why we're
I
here.
can say that a question that is asked a lot too is, why are we tracking hours if they already have 1,000 hours? And what I'm going to say, and what I am big on, is consistency. And why change something, right? So number one, if they have a contract that gives them 1,000+ hours, um, we're going to track their hours. And if something happens in the middle of the year, they get the service credit they're entitled to. If they're a coach, they could have met that 1,000 hours within the first 3 months of the plan year. So that's important. But then further, I guess I would pose a question back, and this is what I normally do is, well, they already have 1,000 hours, so why do we have to keep tracking? Like they've already worked it. We're already towards the end. Why do we keep tracking? Well, why wouldn't we? Why would we change our practice ever? Like, why don't we just make it as simple as we can make it? Yes, you can only get 1 year of service credit, right? So you reach that 1,000 hours, and bing, you've got a year of service credit. No percentage of it, no portion of it, you're good to go. But why not just stay consistent? Why not just have the rule be you track all hours for every employee every time service is rendered? To me, that's easier than having this caveat of, okay, now once you have 1,000, because also that it's not an accurate reflection. I mean, yes, they still get the 1 hour the 1 year of service credit, but it's not an accurate reflection.
All right, and Kathy asks in regard to the last question. So she's talking about the football plan. She says even if it's in the next plan year.
Yep.
Yep.
Easy enough. Next payroll period, that's when they start.
Okay. Julie says, please tell me again, where do I find the information to hand employees why extra duty logs need to be completed, or what page in the manual? I apologize, I don't write that down. We have attached it, I believe, to the file that you can send them. So I am going to I'm going to recopy and paste that. So like for the I'm going to recopy and paste the extra duty log here and put it in the chat. And if you look at that, it's a spreadsheet that on the second page, it has that statute on it, as well as some scenarios as to why it's important for them to be um, reporting this stuff. So Vanessa, anything else to add to that?
Well, I just want to say, Jamie, I just saw your comment about how frustrating it is, and I want to say that I hear you loud and clear. So if we need to discuss further, or if you need me to send you that specifically, if you can't find it, or if you need something else from me, please get a hold of me, let me know. But I hear the frustration in getting them to turn it in.
Excuse me. All right, and again, we kind of seem to be out of questions right now, but we are here until we stop getting them at all. So continue to send them in, and Vanessa will sing us a few bars of Killing Me Softly until we get, just kidding. We'll hang out here for a while until we make sure we have all of your questions answered.
I just want to say to everyone, don't hesitate if you think of something later to follow up with us, and that's what we're here for.
Absolutely.
So, did we already answer this? Oh yeah, we did. I'm sorry. Not so the electronic non-cons um had a question. Go. Is everyone signed up for them? Um, so if if you are signed up, I mean I would have had to do it manually. Um, if you are signed up, when you log in uh, to your where you would normally upload your monthly report, it's just going to be an option that says something like work on non-con data over on the left. It's just going to be an extra tab that you have, an extra option um, to submit those. If you don't have that button when you log in, going to need one of those employer contact update forms, and then I'll get you set up with it.
And I just put the link to where those forms are in the chat again. So I thought I had read somewhere that teachers' extra duty could be paid out over 12 months. From what I'm hearing today, I shouldn't be doing that. Just wanting to clarify.
It,
So there's a difference in pay and reporting. So what we are asking is that the extra duty be reported when it's earned. We understand again that the contracts may not allow for that right now. And so an adjustment can be made to rectify that. But that's also why we're asking that maybe coming up in the future, the contracts are something that we look at to change. It looks like we had something on here saying that the deadline is August 1st for the non-cons. Did we make sure we mentioned that verbally?
I believe
Yes.
Jeremy did, yeah.
Okay, perfect.
Oh, do you have the legislative statute for extra duty wages to be paid during the time of service?
So that again, if you go to the extra duty log, on the second tab there is going to give you the specific statutes and the correlating rules and regulations, and then the examples that will help your employees.
And again, that should be one of the last two things there in the chat. I'm looking at chapters 4 and 5 for extra duty pay and hours. I can tell you this is not clear enough to give my coaches and what exactly needs done when. Is there anything else you can give us? So is that, I assume, Ada, you're talking about in the employer manual. I would say that the information on that second tab of the Excel, that second tab of the extra duty log is more detailed than that and has good information in there that for them as why they should be putting that in there. Does anybody else have anything to add to that?
No, that's definitely something we can look at too. We are always updating our manuals and our handbooks, and that's something that we can note and make sure that things are in there that help you, because that's ultimately the purpose. So don't ever hesitate if there's something that's not clear or you're struggling with something to let us know, and we kind of have a running log of things that we need to add or change or do to those.
Tony, this looks like maybe for you. Should I be filling out an adjustment report for each teacher's extra duty pay when it's paid out of their extra duty time frame?
So technically, yes. Going forward, that's how it's set up legislatively. We as far as I understand it at this point, we're not we're focused more on going forward than looking backward, because some of that stuff, was previously messaged a little differently. but yes, technically it should be I mean, if it's spread out over, yeah, if it's, I mean, so if it's just, if the pay is lagging uh, a month behind, I think I answered before. That's super common that people pay, you know, hourly employees a month behind, um, and that's fine as long as all hourly employees are paid that way. You do it consistently, and if anything changes with that, you need to let us know. Um, but as far as it being spread over 12 months, that is something we would want corrected with an adjustment at this point.
Very good. We've kind of reached the end of the questions we currently have, but we'll, again, keep hanging out here. I don't have
I will
anything else to
add
do.
to that. I'll add to that. If you do get an audit, that is something that we will um, directly deal with in the audit. So
All right. So again, as you're trickling out, please fill out that survey. We appreciate any feedback we can get from you about our event today. We would like to continue to do this in the future, but obviously we want it to be something that helps you out and meets your needs. So your feedback is going to be really helpful in letting us hone this, sharpen the sword, as it were. Um, we have a question here. Our coaches are paid a flat salary amount per contract and do not turn in any kind of timesheet to report hours. Now what do we do?
Well, you would want to get them reporting their hours for sure. The Again, the extra duty logs are not a bad way, not a bad resource that makes it pretty easy for you to just give it to them and say, you know, record your time when worked. Um, and again, if they don't do it, that's that's more on them as far as their uh, the outcome for their retirement.
and it's one step at a time, right? I mean, COVID brought to light so much for us, and so we are trying to make things easier for everybody. I know with change comes a lot of front processes that are going to take longer, but in the end here, we're hoping that this is just better for everybody. So this is perfect timing. The upcoming school year's going to be coming up, and we can look at it. It's okay to have a flat salary. I mean, I can tell you I haven't seen one contract or dealt with one school that says our coaches get paid X amount of money per hour. It's not how it's done. So that's where the reasonableness comes in, right? I've had some explain to me their coaches work all year and they've been able to articulate how and why and provide me information on that. Well, fair game. If they're working 12 months out of the year, then have the documentation to show that and give them the money when it's earned 12 months out of the year. If they're working 10 months, if they're working 3 months, if they're um, so it's just one step at a time. It sounds really big and all encompassing, and it's hard to get buy-in, and I get it. I've had a lot of conversations with a lot of people that are really not impressed with this. But I'm telling you, I think in the end, this is going to be helpful from the front side to accounting to the audit side to our retirees getting the payments they deserve in a timely manner at that. So look at contracts maybe, look at just dividing. If it's 3 months, divide that flat salary into three equal payments and they're paid in the 3 months they're worked, right? That's reasonable. I don't care if more hours are this month versus that month. Dividing out percentages, I'm I'm okay on the audit side. Jonathan's okay on the audit side. Let's just talk about reasonableness. So, and then you give them those extra duty logs and then check your boxes on follow up on that.
All right, we did just get a few more in. So So we just worry about us getting into trouble if coaches do not log hours and we can't get them to. So I think you kind of just answered that, especially since you want us to report hours and earnings for extra duty when actually worked and earned. So I think you kind of just answered that, as you can't babysit. You
Yeah,
can
and let
give
me
them the information.
elaborate really quick on that is here's the deal. Come and audit. I understand that reporting agents take audits very personally, and I get that. But know that if you and I have an audit together, we're going to get to know each other really well. I am more about education and working with you and trying to make it so that everybody is a winner in the end. And I'm telling you that if you check your boxes, if you come to me and say, Vanessa, look, I have given them their logs. I have sent out monthly email reminders. I even got the superintendent and the board to change the contracts to say they're required, but I'm still not getting them. Then your audit letter is going to say, Tanya did X, Y, and Z. It was documented X, Y, and Z, and this employee still refused to give it. And so at some point, that onus and their retirement is on them. It's you, we just all have to check our boxes. So I'm taking the getting into trouble as an audit finding maybe, but if you can provide us with the documentation, then that's articulated in there.
And then Julie says, I'm seeing the extra duty log in your search, but I don't see the information that we can hand an employee of why we need the extra duty log completed and what it's for. It should be on this, there's a tab at the bottom of that spreadsheet where that information is. Let me see here. Nope, wrong one. Trying. Oh, she found it. Okay, very good. I won't open it then. I'm still confused on if we pay our coaches a salary across 12 months, but they only have hours over the season they coach. We report the hours during the months they work. Do we have to do an adjustment report for the months that they are getting paid but not hours working?
Yeah. So like when I did the maternity leave example, um, if and I read from the audit newsletter, if they are not working uh, during a certain period at all, and there's no paid time off, um, in almost all cases they sh- um, they should have 0 hours and zero compensation. And if you paid that all out over the year in a bunch of months where they did not work and had no hours, what the adjustment would need to be doing is taking the compensation out of those periods and moving it back into um, the months that was actually at the school working. That answers your question.
All right, and I did have my spreadsheet popped up here, so I'm just going to go ahead and show, even though I think Julie found it, but just in case other people are looking, this is that extra duty log, and down here at the bottom where it says mandatory reporting, if you click there, that's where it gives all of the state statute information about why they need to be keeping track of their duties. So it's just another tab there. So very good. Kind of running out on questions right now, so we'll give it another 3 or 4 minutes here, and if we don't get any more questions, we'll go ahead and sign off. Again, if you think of something after the fact, don't hesitate to email Tony or give him a phone call. Okay, I'm not seeing any more questions come in, so I'm going to go ahead and call it here. Thank you so much again for coming today, those of you who are still with us. I hope that it was this information was helpful to you in this question and answer time. Again, if you have any more questions, don't hesitate to contact us. This particular workshop should be up on the web by the end of next week, and please fill out that survey. But that is all. So thank you very much. Have a good afternoon.